Welcome to another series or another episode with Wendy Silibi entitled Let's Talk Money. I'm excited today that we're going to be talking around financial inclusion. We're going to talk all things credit bureaus because I'm here at TransUnion, and this morning I'm speaking to the CEO of TransUnion Africa, Mr. Naik. And I'm hoping that at the end of this conversation, you will take a few nuggets of wisdom that you can apply, and maybe you'll be moved to go beyond the things that you do every day. So, Lee, good morning.
Wendy, thanks for having me. It's a pleasure.
Yeah, I'm really excited to be here, just in the building. It was quite interesting. We came here and then, of course, we were in a drill. We had to walk 9 flights down, but that was good exercise for my heart. I don't do a lot of exercise. So maybe share a little bit about yourself, who you are, so you can share as much or as little as you'd like.
It's a pleasure. So my name is Naik. I'm the CEO of TransUnion Africa, which is 8 countries within the Africa region. So I'm what the business would call the regional president of the business. Been here just over 6 years. I have a background in strategy and in digital transformation. I worked on the largest technology consulting firms in the world in my prior career. And so over the last 6 years, I've been here in a business that's been around for over 120 years. And my focus has been on focusing on transforming this business to solve problems that matter. And both you and I are both passionate about financial inclusion. And that's my primary problem that we're tackling as an organization. How do you release the potential that's latent within Africa using the solutions that we deliver?
Wow, that's great work. I've done a lot of work in the deep rural areas under the consumer financial education space. Where we were really spending time to educate our communities that have never really had the opportunity to use banking, the opportunities to even open a bank account. So we spent a number of years just teaching and just opening up, the opportunities for them to be financially included. You alluded to financial inclusion, and I think we all talk about financial inclusion. Maybe for those that are watching, what is financial inclusion? What does it entail?
Well, it's something I can really appreciate. In fact, one of the reasons I joined this business was financial inclusion. I grew up in a township called Chatsworth in Durban. So I come from a community that was disenfranchised in our history as a country. So when I think about businesses like TransUnion, how do you help empower those that were previously disempowered by the system? So for me, financial inclusion can be framed using numbers. Some say South Africa has around 60 million people, around 40 million adults. And of the 40 million adults, 18 and above, around 26 million are active in the credit system. And what that means is that they have a personal loan, a car, they may have some product like a short-term loan, but they are active in the system. And by and large, what that means is that there's around 14 million people, adults, that are not able to access finances. Now, what we do know, as you've been talking about in your podcast series, is that money does make the world go round. So how do we actually get people access into the system? And for me, financial inclusion talks about those 14 million people in South Africa. We say across the African continent, it could be as high as 500 million people that aren't in the financial system. And the opportunity here is to find ways to better understand both consumers and businesses that aren't able to access the financial system by seeing them for who they are, not traditionally in terms of them accessing finances because they haven't been able to, but are we able to use new advances in technology and intelligence to better give people a second chance? So inclusion is about taking those that are outside of the financial system and giving them their first pathway into accessing finances. And we believe that's key to their economic and their personal success.
Sure. That's amazing. And, if you think about it, people that have been previously excluded, they also are not open to using digital platforms. Some of them, they find it very foreign to engage around, your cell phones, and even going into the bank. I mean, these days, when you go into a bank, they help you to do it yourself, so that in future you can come in and be comfortable. How do you do that? How do you bring in the digital piece into educating probably people that have been outside of the financial
That's a really good
space?
question, I think, for a couple of reasons. I think the pandemic that we've gone through as a global population is interesting because in many regards it's fast-tracked this notion of digital. So we say now that the world is digital by default. We don't talk about going into a bank or a retailer. We always ask the question, how do we access the services using how I live my life? And for many of us, we're attached to our smartphone, our Android device, our tablets. So that's the way the world works. So what happened in the pandemic, which is really interesting, in the initial part of the pandemic, when we were under hard lockdowns, we weren't allowed to leave our houses. What really happened was that businesses had to evolve to channel their services into the smartphone or into the laptop device. So the notion of going into a branch was taken away from people. So fundamentally, the business models of banks, lenders, retailers changed, right? And why that's important is that businesses have now realized to get into the hearts and the mind and the wallet of Wendy or Lee, I've got to change my go-to market. So that's happened as well. So post the pandemic, in fact, the world now works this way. If people are buying in an online shop or buying on a mobile app, in fact, this is how they've stayed in the path. So what we do at TransUnion is we work with over 5,000 businesses, small to large organizations in South Africa, and many more across the continent. We find ways to interface into the distribution model of the clients we work with. So if it is a bank, we would help to find ways to get the credit score or credit report into their website, into their mobile app. We find ways to simplify the basic questions about the credit report. How do I remediate my behavior? Also, in the pandemic, we realized that with the credit scores dropping for many people, not because they didn't want to have a high score, our disposable income was under stress, jobs were being lost. We decided to launch new innovation with some of our clients where we could now help consumers realize, okay, if my score is dropping, what steps must I take practically to improve? Because if access to finance, a key gateway is a credit score, what can I do? We realized that credit scores or just accessing finance, specifically in the rural communities, it's difficult to access. So we, not just us, but the national credit regulator, the banking landscape and the lenders, we're all putting our hands together to say, how do you simplify the education? Whether you have a smartphone or a feature phone, whether you watch TV or the radio, how do you start to communicate in a way that makes accessing finance a lot simpler?
Yeah. Sure, that is amazing work. And I must say that, the pandemic really pushed most of us, to go digital. I mean, even the ways of work, I remember the organization I worked for when they told us that we would have to come into the office twice a week or 3 times. I was like, what am I going to be doing at home? So the pandemic fast-tracked that. And now when they wanted us to come back to the office, it was a nightmare to say, I've been at home, I've been doing this. If I can use my digital platforms to do these things, why do I need to drive into Sandton in the traffic when I can do it from home? So I think what you are doing and with the other role players is to be commended, just to make sure that our people that have been excluded are brought in. One of the things that I loved about reading during the pandemic and post the pandemic were some of the insights, credit insights that TransUnion would from time to time write about. Can you just share a little bit about those insights and consumer behavior?
With pleasure. One of the things we wanted to figure out is, given the notion of what is a credit bureau, we're able to see the universe of the adult population in South Africa, and we are watching for certain behaviors. One of the first things we saw in the pandemic, probably in the first 6 months, Well, we always heard that the consumer is king or the consumer is queen. We realized that when the consumer was locked in their households, that they were truly in charge. I couldn't control what Wendy was thinking. She wasn't watching TV, she wasn't watching the billboards. Her priorities were different. So we started to realize that the consumers started to think about their more well-balanced life, their health, their kids. They weren't worrying about what am I buying next. And they even were wondering, will I be around tomorrow? So we started to realize that the consumer was more powerful than we thought, and the pandemic returned the power to the consumer. Even today, the consumer is a lot more judicious. We are now shopping around. So we also found that as we saw the consumer taking back power, one of the things that they did was they started to shop around. Now, what did this mean? So you may have said previously, I like this black t-shirt of a certain brand. Then you realize actually, a black t-shirt's a black t-shirt. I can buy it from this shop or that shop. In fact, we saw in the pandemic that many retailers started to change who they wanted to be. A smaller retailer started moving up, selling different products. Some guys are selling a certain kind of beef or a certain kind of chicken, or they're selling chocolates or a certain brand to capture new market shares. In the telco sector, we saw telcos moving into the banking space, offering things like airtime credit. Innovation was starting to happen. And what we saw was that those businesses that really got to understand the consumers were better positioned to be relevant in the pandemic and post the pandemic. Now, what have we learned post the pandemic? Because post the pandemic, it hasn't all been that good. We're now talking about a global recession where countries around the world are fraught with pressure to be relevant, to drive growth, but it's tough out there. Disposable income for households is tough. Job pressure in Africa is tough. So what does one do? What we found happening in our insights, which we do on a quarterly basis, is that at a household level, these households are under pressure. In fact, many of the households still tell us that they're unable to pay their bills. Now, those bills that you have to your creditors, if you aren't able to pay that, two things happen. One, you start to go into default with these organizations. And when you start to go into trouble with your lenders, it may prevent you from accessing the very same credit you need to be in your life. So that's an important thing. Then the second thing we realized was that there's this population group, we call them the Generation Z or the Alphas, and I can resonate with that. My daughter is 12, my son is 14. For the younger populations, as they get into adulthood, they have a different set of behaviors. They have a different approach to life in terms of what they value. They are pro-climate. They don't want to own cars. They want to use the sharing economy. They want to buy everything online. And those are the populations we didn't understand as much. So we found two insights, and then I'll stop to maybe get your comments as well. We found that under duress, households have been a lot smarter in deciding where to put their money. So we call this reduction in discretionary spending. We saw that in certain products that we're buying, for example, insurance. Not that they didn't want insurance. They said, to survive and run my household, to buy my food and buy my fuel, I'm stopping insurance maybe. Or I don't need DSTV. Or I'm canceling my mobile contract. They're starting to make calls just to keep their liquidity going so they can live their lives. So that's the one big insight, that under pressure, households are making better calls, realizing if they don't honor their credit agreements, they may be cut out of access to credit. The second thing we learned is that this newer population group, the ones that are entering adulthood now or in the next 2 to 3 years, are going to be very important. Their behaviors and their choices are very different. We as banks and as lenders and as financial institutions need to spend our time understanding what's important to them so we can drive relevance to them. So those are insights we monitor all the time. And the reason we build these insights, Wendy, is that we want to help not just our consumers understand what's going on, but we want to help the entire ecosystem better organized to drive inclusion. If we can't understand these behaviors, we can't model our decisioning on what's happening in the broader population.
Sure. No, that is some great work that you've done there. It is very important that we understand the newer generations. You know, with us, the baby boomers, we are called the generation of baby boomers, it was totally different to the new generation, how they look at things and how they value things. And if the banks and other role players don't understand, you know, what their needs are and how they are wired, then they miss an opportunity of really getting them, you know, included. And they are the future, by the way. You know, the baby boomers, we are declining as the years go by. So in terms of credit, you know, during the lockdown, I read one of your reports where you were, your insights report, where you were just talking around how households were indebted and how credit, people had overextended themselves with credit, and as a result, some households had very little to maneuver with in terms of the disposable income. Would you like to just maybe comment around that in terms of credit? And as a result, like you've said, if people are already overextended, they are unable to access the very credit that they need to move forward. And probably if I was one of those people that had overextended myself and found myself in that situation, maybe I already have a negative report, or, you know, what we term negative reports, like a judgment, like an adverse report. What are some of the things that probably someone watching could do to get themselves back into a space where they can be able to access credit?
Well, it's a great question. I think it's important to know that it's tough out there for everybody. You know, we've had a significant number of interest rate increases between January 2022 and right now. So we recognize it's tough for all manners of people. So you may have had the house or the car or this loan where you could afford it, but given the number of interest rate increases, it probably makes it unaffordable. And concurrent to that, you have high inflation, meaning it's a lot more expensive than what it was just 18 months ago. So we recognize the pressure. When you talk about household pressure and what advice I'd give, one of the first things we talk about being a credit bureau is, do you understand your exposure to credit? So we still find today that even though every credit bureau like TransUnion gives you one free credit report a year, and also whether it's your bank or other lenders, many people give you access to credit reports, we still find it a very small part of the population. In fact, I mentioned earlier to you that we have around 26 million credit active people, but every year only a few 100,000 people access the credit report. So the first step, Wendy, is that knowledge is power. Get access to your credit report. Not because it won't contain some bad news, maybe it will, maybe it won't, but if you don't know, how do you plan your strategy? So my first approach is get access to credit report. Get access to more than one because it's freely available from many sources. The first thing is access your credit report. The second is understand your exposure. What we know is that if you aren't maintaining your payment obligations, you start to talk about words like defaults and judgments. Now, for many people that are in pressure, their view is to maybe ignore the obligations. And our advice is understand your obligations. And if you can't meet the obligations, call your lender. Lenders don't want to punish you. Their view is to actually keep you as a healthy client, but they don't know you can't meet your obligation. They're going to struggle to help you. So once you've understood your credit report, understand where you're not meeting your obligations, or whether you'd say to the bank, listen, I'd like to restructure my obligations. What can I do? Before you get to concepts like debt review, where I know in the previous episode you've talked to the National Credit Regulator, before you get there, the credit report gives you the insights you need to make better choices in the short terms. So get access to the knowledge, understand your obligations, and if you can't meet the obligations, then make sure you're able to call your lender and say, what can I do? And the general consensus is that lenders are open to having a conversation because they want to keep you as a consumer. It's good for you, it's good for the business. How do I make it work? The third thing is to actually pay down your debts in a regular manner. So many people will maybe miss a payment here, miss a payment there. And if you start to miss 1 or 2 or 3 payments, you start to go into a concept in this industry we call a default. Once you get to 3 months of non-payment against an account, you start to get flagged as a defaulter on your credit profile. And that's going to start to then impede potentially your access to more credit. So if you know the profile of your credit report and you start to honor the payments, and if you can't, you talk to somebody about it, it's better than ignoring it completely.
Yeah.
Now, assuming you've done these first 3 steps, the next thing to do is saying, if I'm highly indebted, we typically tell people you should try and utilize about 35% of your credit limit. Many people are using up to 100%.
They go, when they give you a credit limit, it's a target. People
Correct.
are thinking, they gave me 100,000. How soon can I use the whole 100,000?
Now, what's happened though is that banks and lenders realize that people are doing this. So what happens now is that the limit is being restricted to an extent. So you see the increase in the balances has moved very marginally over the last 15 months because the banks and lenders know it's a riskier climate right now. So the advice from us to consumers is understand the obligation and create some ability if you do need it to go for it. If you're using 100%, then you've got no liquidity if you wanted it. So if you are paying down your debt, we typically say, look at the ones that have higher interest versus lower interest, pay those first. If you've got 2 or 3 of the products, maybe talk to your lender and say, can I consolidate so you have fewer to go after? But many businesses and lenders want to do business. The key thing is here to realize that you have an obligation as a consumer to meet the lender halfway. Understand your obligation as a consumer. When we got access to credit, whether it's you or I or any consumer, we had an obligation via the agreement. We want to make the agreement work. And if we can't, reach out and ask for the assistance. So paying down debt is important. And then the final thing, which I think is actually a positive compliment to the population of South Africa, over the last year, we see that people have realized more and more, and this is where the work that you've been doing for the last 10 or so years has come into play. People realize that credit is a powerful tool that can't be abused. We've seen consumers improve their credit health by making better choices. One is to use less credit and save or shop around if needed, but also we have this concept called deleveraging. And what that means is that if, as opposed to using credit, ask yourself, do I need it or do I desire it? If I need it, then plan to buy it. Maybe you're going to buy it in 3 months and not on credit. If I do need credit, use my credit responsibly. So I think the education is working because it's tough right now. And these are some of the examples I give. But I must end where I started. Knowledge is power. And it starts with your credit report.
Yeah. Wow. There you have it. Lee has just given you the best advice ever. Get a credit report at the beginning of the year so that you understand what your credit status is looking like. And it's not something to be afraid of. Really, it will give you an indication of where you need to make changes so that you can be relaxed and know that you're working towards changing your credit ability, to access those things that you truly want. And I think what you've said, Lee, that's very, very important as well, is that, when you pace yourself, most of us want this microwave success. I want it all. I want these shoes. I want this dress. I want this car. I want this. But if you actually budget or you do a proper plan and you can actually pace yourself and save enough to buy some of the items cash so that you don't pay interest on them. And one of the important things that you've said there is that, people must try at all times to engage with your creditors. I think most of us are afraid to engage with our creditors. When you see those private numbers, the 087 numbers, people don't want to answer those numbers, and yet the creditors are actually reaching out to you to say, let's talk, let's try and preserve your credit status so that in future you can have access to credit.
I think it's important to note, Wendy, that To take the actions of default and judgment is actually hard work. So the lenders actually want you to be successful and be a good repayer. So we need to recognize that by taking credit or access to credit, we have an obligation. So on one part, we expect the lenders to be open to difficult circumstances. On the other part, consumers need to empower themselves, one, and then second, they need to step up and say, I have a problem.
Yeah.
How can we work around it? And I believe that in the goodness of what's going on in the economy, we want us to all succeed. And the pathway to economic success is starting with you and starting with me. How can we play a role in that economy? If I can't participate, we can't grow our economy.
Yeah, awesome. Well, Lee, I think this has been a very insightful and very, very educational, one of the educational episodes that I've done. As I've said, I truly love the work that you do in terms of insights, because these days insight-led organizations are the ones that will thrive and catapult into the future. And maybe just as to ask a last question, if I'm looking for a free report from TransUnion, how do I get it?
With pleasure. So there's two ways to do it. The easy way, because everything's now digital, go to transunion.co.za and apply for your credit report there. You can also call our contact center, 0861 482 482.
Okay, wow, okay. Well, we have come to the end of the conversation, but I always, at the end, ask my guests to share a seed of wisdom, like a nugget that our viewers can really hold on to. Every time they think of this conversation, they must remember what you said as a parting shot.
Absolutely. Well, thank you for the opportunity. I'll probably end where I started off. The opportunity at TransUnion starts with me believing in the potential to solve a problem that matters. Financial inclusion is a problem that matters. We are Africans. We have 54 countries on the continent, and we're going to be growing our population by 2 billion people over the next 80 years. Our ability to include our people in the economy of Africa will see us rise and accelerate into our potential. But it starts with each one of us. What role do we play? And as I tell the business here, focus on solving a problem that matters, connected with your personal purpose. When you wake up every morning, what problem are you looking to solve? And for me, the final words are, Africa is latent with potential. How will you all play a role in helping us realize our potential? Thank you, Wendy.
Thank you so much. Well, we all have a role to play, and the roles that we play are connected to our purpose. As Lee has said, what is that solution when you wake up in the morning that you would like to solve, and not just for yourself, but for the whole of Africa? And also he said, knowledge is power. Very, very powerful. I'd like to go a step further and say applied knowledge is power. So let's go out there. Let's do what we have heard in this podcast. Let's manage our credit, the way we use credit. Get that report. It will help you in solving, your life. That's the end of our session for today. Again, I'd like to say thank you to Lee for taking time out of his busy schedule just to come and chat with us. Until next time, behave and please get your credit report.